Hello everyone and welcome to this specialist trading presentation. Now today I'm excited to talk to you about our Elite Emini Trading College, where we actually only present this college roughly about once a year. So this is actually going to only be the second time we are going to be introducing this college to all of our students and prospective members. Now I'd like to start out this presentation by sharing a chart with you and just showing you right here, even though this is a 15-minute chart of the E-mini S&P, what I'm going to be sharing with you today could actually be applied to daily charts, it could be applied to weekly, monthly, and even to other markets such as stocks or futures and currency pairs. But if someone looking at this would say, well, there really isn't any clear trend path here, we're basically going sideways. But I'm actually going to be sharing two techniques today that are part of the E-mini College where you would have been able to apply to this particular chart, and in doing so would have generated a buy signal right here. And as you can see, what would have happened within the next hour or so, roughly 12 points to your favor to the upside. That would have basically transferred on to $600 per contract. So this is all going to be included in our college, and this is going to be starting very shortly. I'm excited to talk about it. I'm going to share with you what's going to be inside the college and going to actually give you two of the rules to one of our best strategies in terms of consistency. So this plans to be a great presentation. Stick around. Welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And if you're new to my presentations, just let me first say that we are all about educating you. This is where we're a little bit different from other webinars because our only goal is simply to educate you as a trader. We've gotten so many new students at the beginning of the year, new members. And you can see the training and the kind of mindset that has gone into a lot of the other sites where people right away want a strategy or system actually that does everything for them and just automatically spits out buy and sell signals and basically leaves you out of the game where there's nothing where you need to do. And we don't really believe in that concept. In fact, it's been my experience that that type of trading is a recipe for disaster because you're not a part of the process. Now, I've been trading for 4 decades. I started my career on the floor of the Pacific Stock Exchange. I traded on the floor for a total of 16 years, and 9 of those years I was a specialist. A specialist was just one of those traders who made markets in stocks. So I roughly made markets in about 50 stocks during the crash of 1987 and the bull market that followed. I've traded just about every system, every different plan, every different method, strategy. So I know what works in terms of consistency, and I know what doesn't work at all. So this is what I do at Specialist Trading. We just teach and mentor all of our students around the globe in over 110 countries and in every state in the United States, all the things that I've accumulated in my 4 decades. So hopefully we can shorten your learning curve and you will be able to get to that point where you can make your own decisions. You won't have to be relying on going to a chat room or listening, waiting with bated breath for the news to come out before you can do anything. You'll know in advance whether we're in an uptrend, whether you should be buying or selling, where your stop is going to be and where your exit will be. And you'll know with a number of variables. This is what we teach in our courses. This is what we mentor to all of our students. So this is what's going to also be presented in the college. It's going to be 6 full weeks of tons of information for trading the E-mini futures, as well as stocks and currency pairs if you'd like to transfer over the techniques as well. Now, I have a lot of great information to share with you today, but before we begin, as always, we ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results as well as 2 clear rules that are a part of the college for trading a particular strategy. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. So as you are taking a moment to view our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. There's our handle right there at SPCLST_TRADG. I post different information on a daily basis, anywhere from actual signals that our strategies have generated to just little bits of wisdom along the way. So lots of great stuff, and feel free to follow us on Twitter. Now, as I stated at the very beginning of this presentation, we are an educational company. We're not going to sit here and tell you that, well, if you take our courses and if you follow all of our rules, you'll be a millionaire in 5 years. We don't believe in that. And once again, I believe that's a recipe for a disaster. If anyone tells you that, you should run, because everyone trades differently. And the reason why most traders fail is because they are not being supplied with a proper and consistent information, trading education. So this is what we do. And in fact, my first couple of years on the floor of the exchange, when I first started trading, in the 70s, I struggled tremendously. So I know exactly what many of you may be going through. I was having a very difficult time, and what was so frustrating was that I was doing all the right things. I mean, I'm sure it probably sounds very similar to a lot of you out there today. I was going to all the courses, reading all the books. I was following all the rules concerning support and resistance, or volume, or Fibonacci support and resistance levels, or Elliott wave. I was even monitoring all of the stocks that I traded in and looking at all their earnings, PE ratios, and looking at all the economic news that was supposed to come out. And guess what? I couldn't make a dime. It really never added up to anything. I would have pretty good trades every once in a while, but then I'd give it all back. So I was lucky enough to have some mentors myself on the floor who were specialists, and they taught me all the things that I currently teach in my courses. So if it's been able to sustain my trading for 4 decades, I really think it will be able to help yours. And so let me just share with you what my mentors taught me, because it's all about being successful. But what exactly does that mean? So here's what my mentors explained to me. They said successful trading should be non-subjective. So what does that mean? Well, how many of you have taken a course or read a book that another trader has, and you'll look at the same chart and you'll both come up with different scenarios? Let's say some of you may say, well, this looks like it's a very bullish indication, and someone will say, no, that's negative. That doesn't seem bullish at all. You see, it's because you're too subjective within the framework of the setup. And trading shouldn't be that subjective. It should be very cut and dry. In other words, two people looking at the same chart should come up with the same synopsis. It shouldn't be that open to interpretation, okay? And then secondly, successful trading should be consistent. Well, now everyone knows you want to be consistent, but what do we mean by this? Well, remember I said in the beginning how some websites will promise you the world and say you'll be financially independent within a matter of moments. We don't believe in that. We believe that success is all about consistency, and consistency is just another term for 2 steps forward, 1 step back. Now, the 1 step back means that it is entirely, plausible, and it is natural to have small losses from every once in a while. I mean, that's just natural. Think of any career, any endeavor. People will go into some type of sell-off or drawdown phase. Either some athlete will be in a slump, or some entertainer won't have a hit single or a hit movie. It's just normal, and then they bounce back. Those are the consistent ones. This is the same thing with trading. We know that from time to time we may have small losses. The beauty is our methods have a certain level of consistency where they're able to recoup rather quickly what you just lost. So this is what sustains you, not some fly-by-night system that promises the world, but a method that is consistent. Okay? Thirdly, my mentors taught me that successful trading should be as simple as possible. Now, how many of you have taken a course or purchased a product, and the minute you start to read it and you open it up or start to try and configure it, you say to yourself, boy, I don't understand. This is too complicated. I know I did when I was first starting out trading. I spent thousands of dollars on programs and black boxes and systems, and I knew the minute I started trying to figure them out that they weren't going to be right for me because they were just too complicated. I wouldn't be able to follow out the plan. If you look at a lot of traders who have been trading for a relatively short time, and that's basically about 5 to 10 years, that's a short term actually for a trader, most of their trading plans are very complicated. They have all these convoluted indicators, lots and lots of different rules. But if you look at the traders who've been trading 30, 40, 50 years, most of their trading plans are extremely simple. 3, 4, 5 rules tops, and that's it, maybe one indicator. Very simple. So stick with that. That's the reason why they've been trading so long, because they finally found that successful trading is all about keeping things simple. And then lastly, and I think most importantly, which we're going to really stress in the college, is that successful trading should make you a part of the process. So what does this mean? Once again, let's define this. First of all, I think the best way to explain this is look at your own trading. How do you come up with your trading decisions? Do you go to a chat room or a trading room every day to find out what you should buy or sell? Or let's say you subscribe to a signal service, all right? Does that tell you what to be buying or selling? Or let's say you purchase this extremely expensive indicator that's supposed to generate fantastic buy and sell signals. Or maybe you just are a trader that trades off news. You have to wait for the news announcement or earnings or something to come out before you can make a decision. This is the way I would say about 3/4 of all traders trade. They make their decisions. But you notice here there's a common denominator, and that is that all of your decisions in terms of what I just described are based off of an outside source, someone or something. It could be an indicator, it could be a news event, but something telling you what you should do. And that, once again, is a recipe for disaster. You should never wait for anything to tell you what to do. The only thing you should be taking your signals from is the chart in front of you. Okay? Remember I said keep it simple? That's the only thing you should be listening to. That's the source. It's basically what you're trading, so that's where you should be taking your cue from. Not from some guy in a chat room, not from some convoluted indicator, but from the market. Now the trouble is that the reason why most people don't do that is because we've never been taught how to do that. Myself included, I didn't know how to do that until my mentors showed me. Well, guess what? This is what we're going to be stressing in the college. I'm going to show you how and what you should be doing in order to listen to the market and to block off all of that other stuff, which my mentors called useless noise, okay? So once I got on board with all of these concepts, that's when my trading started to turn around. And that, I believe, is what has been able to sustain me going on 4 decades now. So this is what I want to share and teach with you. The same things that were taught to me, the same things that work for me, hopefully you can absorb this information and have it work for you. Now I'm going to be sharing a lot of information about what's in the course, the Emini College I should say, and I'm going to be also sharing with you a couple of the rules to one of our most consistent strategies. But before we begin, I know we're a little bit different from other presentations because I know a lot of people like to ask questions. In fact, I know that I see even some of you already are asking questions. But remember, this is a classroom, so keep your questions till the very end, okay? We're not going to take any questions to the very end, so there's a little box I have to open up in order to even see your questions. So I won't be taking them till the very end. So just kind of try to remember them, and then we'll open them up in the next half hour, okay? The only question I will answer, and that is probably the most common one, and that is this being recorded? Yes, it is. We record all of our presentations, so if you have to leave early or if you're basically having technical difficulties, we will be able to provide you with a link to this, okay? So let's begin, and once again, if you happen to join us late, just keep your questions till the very end, and I promise I'll get to them then. Okay. As we stated, we are an educational company. My goal is not simply to force feed you signals. My goal is to teach you how to trade. Okay? My goal is not to trade for you the way so many other sites do. If you look at so many other websites, they'll say, well, we tell you every day what the best stock is, what the best time frame is, where to buy and where to sell. I mean, you might as well just take yourself out of the game. You know, can you imagine a doctor saying, well, can someone operate for me, or can someone fly this plane for me if you're an airline pilot, or if you're a lawyer, saying, well, someone will do the court process for me. I mean, you're taking yourself out, and the message you're sending to the market is, I don't know how to do this. I'm really not that good, so I'm going to pay somebody else to make the decisions for me. And that really is sad because it's your hard-earned money. It's your inner strength to try and make your own decisions. So this is what we're trying to get you in touch with. So just believe in yourself, have that self-esteem, and the way you do that is through sound fundamental education. So once again, my goal is not to feed you signals. My goal is to teach you how to trade with the specialist edge. All right, so let's begin. Here's what's going to be offered, just to let you know what's offered in the curriculum for the college. It's going to be 6 weeks of jam-packed tools, methods, and techniques. The first week, we're going to be talking about the foundation and building blocks of E-mini trading. I've touched a little bit on it. I will show you some more examples later on in this presentation. But it's basically the philosophy behind how we trade at Specialist Trading and ProTrader Strategies. Week number 2, we'll start going into strategies, and we'll talk about one of our most consistent pullback strategies. This strategy is basically looking for a defined trend, whether that trend is up or down, and then we're looking for purchasing at lower prices in an uptrend or selling at higher prices in a downtrend. So it looks as if we are picking tops and bottoms, but in all actuality, we're just picking a great low, inexpensive price in an uptrend and selling at a great high price in a downtrend. The great strategy, strategy number 1. I'll show you some trades with that in a few moments as well. Week number 3, we go into our most consistent strategy to date. That is strategy number 4. This is by far our most popular as well as consistent strategy. Why? Because it works so well in every market, every time frame, and in any direction. And I'll share with you some trade examples, some very recent examples with that also. Lastly, we go into week number 4 in terms of strategies, and that's strategy number 7. This strategy was specifically designed for the E-mini S&P. I personally only trade it with the E-mini Futures. It's a daily strategy and it works extremely well. I'll show you a signal that was generated just a few weeks ago that I believe generated close to 40 points in the E-mini in just about 3 or 4 days. Now in week 5, once again, we go into one of our most popular tools. That is the PET-D. You've heard me speak about it before in presentations where I just devote an entire hour talking about the PET-D. What the PET-D is a proprietary tool that is probably the best thing I have ever used in my 40 years of trading in determining the short-term trend. But remember, it's not a strategy or a system. It's just a tool, but we can use it in a number of different ways. So the beauty of this tool is in how I teach you how to use it and how to apply it to your trading. And lastly, in week 6, we talk about a couple of things that we don't offer in any other course at all. We only offer them in the college, and that is advanced trade management. Okay, this is a great technique I learned on the floor of the exchange. And I'll share with you exactly how it works in just a few moments, but it is a great way to really decide when you should be trading and when you should stay out of the market. And then lastly, we'll put it all together. We'll answer any final questions that you may have and go over things that are wondering about, and we'll give you different techniques for entries, different techniques for exiting, different techniques for stop placement. So there's tons and tons of information. Let me go down the curriculum and let's start out with some of the tools and techniques we'll be teaching you. Now here's an example of, first of all, our number 1 edge. Edge number 1, this is a simple tool designed to place you on the right side of the market in any time frame, in any direction. Most traders fail, in my experience, because they are on the wrong side of the market. And with this tool, it's so easy to know whether you should be buying or selling. Here's a perfect example in the 5-minute chart of Emini Futures. And remember, this can be applied to a daily chart. It can be applied to stocks, futures, currency pairs. But as we're looking at a 5-minute chart of the E-mini, we see here that the future gapped up, okay, and then really started to rise, and it looks as if it's rolling over. Let's say some chat room you're in says you have to sell it here. Let's say the trading room you subscribe to says these are tremendous resistance levels according to the institutions and all the big guys. So you got to sell here, and it looks like it's rolling over. So you decide to jump in and sell, and look what happens, okay? Look familiar to anybody, all right? Well, with this tool, you'll know that you shouldn't have been selling at all. In fact, you should have been looking for buy setups. We'll also go into edge number 2. Now, this is also a technique, but it's to fine-tune your entries, and it can result oftentimes in high percentage trades. I found out that many times traders are actually doing okay. It's not that they have a faulty strategy or method, it's just that their entry technique is faulty. So here's one way to fine-tune your entry. Now here's an example, another 5-minute chart of the E-mini. Let's say that you have an idea. Let's say you're not even caring about outside sources telling you what to do. You have a good trading plan and you feel confident about it. And right at this area right here, you start to say, well, you know, this is an area for some type of a setup. In fact, my strategy says that if we break this topping formation, I should sell here. Okay, it's a double bottom, but if we break that, that's a good area to sell. So let's say you watch and you wait, and lo and behold, the very next 5-minute bar breaks and closes below that, so you sell. Okay, now with the technique we're going to be sharing with you, we're not saying that it necessarily wasn't a bad idea to sell, but it was just your entry technique. Possibly we shouldn't have been entering here. The technique I'm going to be sharing with you in the college would have actually waited until price went up a little bit more, and you would have sold actually on this bar. And once you would have gotten in at a much better price, look what would have happened, okay? So as we stated, once again, it was the right thing to sell. It's just that your entry technique just jumped the gun a little bit. And so this is what happens many times to traders. How many times have you been in a trade and you get stopped out and say, boy, the minute I get in, it goes the wrong way. And then the minute you're stopped out, it heads in your direction. It basically was because you had the right idea, your entry technique was faulty. So we can help you with this technique as well. We're also going to be talking about exits. In fact, we're going to give you a variety of both aggressive and conservative exits. Remember, our job is simply to provide you with the information, and then in the last few weeks we mentor and work with you so you can decide which of the tools and techniques you want to apply. So we're not giving you full-fledged strategies and saying you have to trade them this way. We're giving you basic formats of these strategies and then giving you aggressive and conservative techniques and tools, and then you can decide how you want to trade them. For example, let's look at these exit techniques. Here's a 5-minute chart once again of the E-mini. Now, a buy signal of one of our strategies we'll be teaching generated a buy signal here in the 5-minute chart. So you could have taken your pick of either exiting for a quick profit here at exit point number 1, or taking a little bit more profits at exit point number 2, or finally taking as much as you could at exit point number 3. This is just one example of the different exit techniques we'll be sharing with you. And remember, we're not a systematic company. We don't have records of each and every strategy of win-loss ratios, of percentage gains with stuff, because in order to do that, one would have to trade the same exact way every time, like a robot. And we don't believe in that. That's a recipe for a disaster, because no one should ever trade the same way. That's why we don't believe in chat rooms or trading rooms, because people tend to turn those into a crutch and think I've got to do what the other person is doing. And that could be further from the truth. If there's one thing I've learned in my 40 years is that everyone should trade that a style or a technique that meets their personal needs. So if you're the type of trader that likes to get in and out quickly, well, then you would choose exit number 1. If you're a moderate trader that doesn't mind staying a little bit longer, exit number 2. Or if you're one of these more aggressive traders that says you want to squeeze as much bang out of your buck, well then exit number 3. Or you could combine each or every one of them. There's a multitude of different ways to trade. This is what we want you to do. We want you to define your own style and become a trader with a purpose. Now we're going to go into stops as well. We're going to provide you with 4 initial stop placements and then 3 moving stop placements. So you have stops in which to pick from. You don't have to just say, well, I automatically place my stop here. We will give you a general broad place for entering, for exiting, and for placing your stops, but we also give you variables so you can decide if you'd like to change those. All right, so let's talk about some of the strategies. Remember, we said we're going to be giving you 3 of our best strategies in terms of consistency for trading. And let's start out with the one that I believe is the most consistent and the best and most popular one. That is strategy number 4. Now, who is strategy number 4 for? Well, it's for traders looking to catch quick momentum moves. When I was first introduced to this technique some 40 years ago on the floor, we were, as traders, would get in and out of positions, and possibly we'd hold a trade for maybe a minute and then we get out. So this is what strategy number 4 was, how it was first introduced to me. But over the years we found out, and since I'm not on the floor anymore, I don't want to just be trading on minute bars. We have designed ways in which to elongate your trading so that you can stay in it much longer if you'd like. All right, so don't worry if you're not a day trader. You can still use strategy number 4 and have some excellent results. It's for basically all students, so it does not matter if you've been trading 2 weeks or 20 years. It makes no difference. We have hedge fund traders who trade it. We have people who just began trading this past week start to trade it. Everyone gets the same basic format in the beginning. That way you learn the structure. And then from there, we go outward and start giving you all the different variables so that you can decide what works best for you, all the little different things you'd like to add or subtract. Now, strategy number 4 is a pattern recognition strategy. All right, we're basically just looking to recognize a pattern. This is what we teach you in the course. Now, its intensity level from 1 to 3, if 1 was the most intense of strategies and 3 was the least, where you could basically walk away, it's right in the middle. It's a very moderate 2, okay? Remember, you can apply strategy 4 to any time frame, any direction, and as well, any market. I'll show you a few examples in a few minutes. As I stated in the beginning of this presentation, our edge is consistency. I'm not going to, sit here and tell you that every trade is going to be a winner. That wouldn't be natural. That would be almost the same as saying, well, this guy on this basketball team makes every basket. Even the best basketball players of all time, Michael Jordan, didn't make every basket. He went some games without even making a basket. But I don't think there would be one person who didn't say he was one of the best players of all time. Well, it's the same way with trading. You want a method that is 2 steps forward, 1 step back. You're not just looking for something that is promising the world, because Trust me, I knew traders on the floor who had these multi-million-dollar methods. They said they would never fail, and they made some good money trading with them, but every one of them eventually blew up. Every one of them eventually gave all their money back. So that's not what we're looking for. As your mentor, I'm not looking to give you some fly-by-night technique and then ultimately blow you up. I want to give you sound fundamental education, techniques that have stood the test of time, and be there right by your side with you every step of the way. Okay, so let's talk about two of the main rules of strategy number 4. I've talked about these before because, as I stated, strategy number 4 is traded in over 100 countries around the world and so many states in the United States. It's our most popular strategy. Why? Because of its simplicity and because of its consistency. So let me share 2 of the rules with you. Now, it has a total of 4 rules. I can't give them all to you right now, but I can only give you half of them. So that's a pretty good little appetizer anyway. All right, rule number 1. We want to look for bars that close in either the top or bottom 25% of their range, okay? So what does that mean? Well, if we're looking at a bar like this, all right, as we can see here, it would not matter if this was a 5-minute bar or a weekly bar. It absolutely makes no difference. But what you want to do is, be able to just by sight, and this would take no longer than a millisecond to do, but just know that you're going to divide it in your head by 4 separate but equal parts. And if you close in that top 25%, that top quarter, well, then that is an indication to buy. Okay? So this is a great, great edge coming from the market. Remember we said that everything you make a decision should be based off of the chart in front of you. Not some guy in a chat room, not some guy on TV, but in the chart. Okay? Because that's the source. That's what you're trading, so that's what you should be only listening to. So the chart right now is telling us it most likely wants to go higher. Why? Because it closed in the top 25% of its range. Now, a lot of people say, well, Steve, I trade candlesticks. That absolutely makes no difference. You'll take the very top of the wick to the very bottom of the wick. You divide by 4. And if you close in the top 25%, that's the exact same thing. It's an indication to buy. Okay? So if we look at this chart right here, well, we can see that we have a total of 3 bars that closed at the very top or top 25% of their ranges. Now, conversely, let's look at the other side of the coin. What if we close in the bottom? Well, we want to divide the bar chart, whatever it is, a tick bar, a daily bar, by 4 separate equal parts. If we close in that bottom quarter, that bottom 25%, the market is telling us. Remember, we only listen to the market. The market is telling us that most likely it's going lower, and this could be an indication to sell. And once again, if you trade candlesticks, absolutely no difference, okay? Here's a candlestick. You just measure from the top of the wick to extreme low of the wick, divide by 4, and if you close in that bottom 25%, the market is telling you it wants to go lower. So there's absolutely no difference if you trade standard open, high, low, close bars or if you trade candlesticks. Makes no difference at all. We're learning to listen to the market. And I just gave you a couple of really nice ways to do that. In fact, go back and look at any chart right now. Look at any chart, and when you see a market, any time frame, close at the top or bottom, most likely it continues in that direction. That's the market telling you it wants to keep going in that direction. All right, so let's look at this generic chart here. Now we see we have 1 bar that closed in the bottom 25% of its range, okay? Now, rule number 2, we're going to enter upon confirmation of that trend. So what exactly does that mean? Well, we're going to buy if price trades 1 to 3 ticks above the bar that closed in the top quarter of its range. Okay, we're not going to just simply buy at the market or place a limit at a lower price. We're going to only buy if it trades above that bar that closed in the top quarter of its range. So as we see here on this first bar, we never really went above it. We went lower. On the second example, we can see here that we actually did trade above it, and we went up a little bit higher. Now, this is all relative because for all you know, these could be monthly bars, but we still went up. Now, in this third example, well, this one worked a lot better. We entered, and look what happened. The same thing will work to the downside. If we want to sell, well, we want to find that we're going to be trading 1 to 3 ticks below the bar that closed in the bottom quarter of its range. So we have that one generic bar here that closed in its bottom 25%. We need it to trade just below here, usually on the next bar. And there it is. It does trade. We entered to go short. And look what happens. You see, all of this is just simply done by listening to the market. I've only given you 2 simple rules here. All right, we have tons of techniques in the college that you will learn how to listen to the market. You won't have to rely, and also you won't have to pay for outside services telling you what to do. You'll be able to make those choices yourself, and for the first time, you'll have the power, the self-esteem to know you're in charge of your own trading destiny. Okay? It's a beautiful thing because then you know that you're your own person. All right, so let's look at some strategy 4 examples and see if you can spot what we just taught you right now in these 2 rules. Now, this was an actual sell signal in strategy number 4 coming into November. As you can see, these are daily bars, so it makes no difference what time frame we're looking at. All right, we close in the bottom 25% of our range. Now, I know that you're seeing, well, there's other bars that close in the bottom. Why aren't they sell signals? Remember, there's a couple of more rules that I'm not divulging now because that wouldn't be fair. That would be like, you know, giving all the rules away to, and it wouldn't be fair to the people that have already signed up for the college. But I've given you 2 of them, and look what happened. Okay, the E-mini fell out of bed coming into November, just a few short weeks. We didn't look at any news. We didn't care what was going on in the market fundamentally. All we listened to is the market. Trust me, once you grasp that concept, you'll see how easy trading is. You don't have to focus on these things that are too subjective, that are too complicated, and that just really don't have any consistency to them. How about a 60-minute chart? Okay, let's go down a time frame to an hourly chart. As we see here, as we discern that the trend is down, we get sell signals. All strategy number 4 sell signals. Now, once the trend changes to the upside, well, guess what? Strategy number 4 only generates buy signals. So we will only be trading in sync with the trend. We will never try to pick tops and bottoms. We're only taking our signals based off of what the overall trend is doing. Okay? Now, that was a 60-minute chart. Let's go down to a 15-minute chart. I believe this is the example I shared with you in the first opening screenshot. As we can see, we're kind of going sideways here, but what do we have? We have a bar that closed in the top 25% of its range. Now, we don't want to just simply buy at the market. We don't want to place a limit down here. We have to wait for it to trade above here, okay? And it did on the very next bar, and look what happened, 12 points to the upside. Now, let me show you some more here, but we go down even further down tick. Well, let's go to a 1,000 tick bar chart, all right? As we have found out with the strategy, we're in a full-fledged downward trend, so we're only going to be selling. We're not going to consider buying anything. So we use the same 2 rules I just taught you, and these were all sell signals on a 1,000 tick bar chart. Now, as I stated earlier, these strategies work the best on the E-mini S&P, but the beauty of them is that they can also be transferred onto other futures, stocks, ETFs, and the Forex markets. So we have a lot of members who like to trade multiple different markets. So some trade currency pairs with futures, some like to trade stocks with futures. That's great. You don't have to purchase an entirely different strategy just because you want to trade a different market. You can transfer these onto different markets and they virtually use the same rules. So let me show you some examples here. NBL, these were all buy signals using, I believe, strategy number 4. And to the downside, UA, okay, starting in September going into late October into November, these were all sell signals. I believe these were strategy number 1 sell signals. Getting a little closer in recent times, we see here that on the 9th, just about a month ago, the 9th of December in EXPE, a strategy number sell signal was generated. Now, a lot of people would say, well, wait a minute, we've really come down and we pretty much bounced here, and it looks as if we're making some type of consolidation, a flag or a pennant before we go higher, okay? According to the rules of strategy number 1, the overall trend is down. This is just a pullback. This is not the beginning of an uptrend. It's a pullback in a downtrend. Therefore, it generated a sell signal. And look what happened, okay? Coming into the first of the year. That was an actual signal that you can apply onto stocks. Now, let's go a little further into the future here. Let's go into Apple. And this was just done last week, I believe, or a week or so ago. On the 3rd, the first trading day, I believe, of the year, we're basically going sideways in Apple, but strategy 4 generated that we're actually in an overall uptrend. We closed in the top 25% of our range, so this was an actual buy signal. And look what's happened in Apple coming in. This chart was taken going into yesterday. So once again, we're not looking at any fundamental news. We're not looking at any economics. We're not looking at any interest rates or anybody on TV, what they think about the stock. We're looking at the chart. Everything comes from the chart. You don't have to waste your time and most especially money paying for these outside sources. Now we can also trade commodities. Here's a chart of crude oil. This is going back to September. Another signal was generated, and look what happened to crude oil. It took off, all right? Once again, we're not looking at economic conditions or what the price of oil is doing. We're only looking at the chart. These were all sell signals, I believe, strategy number 1 in the euro-yen on a weekly time frame. So we've transferred into an entirely different market. We're also looking at an entirely different time frame. We're now looking at weekly charts, and look at all the nice sell signals that were generated on these pullbacks. So you can see these strategies work well not only in Emini Futures but also in other markets such as stocks or currency pairs and in commodity markets. But we're also not stopping there. We're going to throw in 2 extra bonuses. We're going to throw in ATM, which is the Advanced Trade Management. Remember, we only share this in the college. We don't have a specific course for this. You can't purchase it separately. And our most popular tool to date, the PET-D. Let's start out with the ATM, okay? Now remember, ATM stands for Advanced Trade Management. I'd like to share with you this chart here. This is an actual chart of signals that were generated using some of our strategies. Now we all love and wait for ideal settings like this. This is when every signal is a winner. As you can see, every time we had a sell signal, the market went down. Every time we had a buy signal, the market went up. Well, that's because the strategy is in sync with the current market conditions. But we all know sometimes our strategies go into drawdowns, which are basically just slumps, okay? And it really is not because the strategy or the method is faulty or because it doesn't work. It's basically, it is out of sync with the current market conditions. So let's look at the same exact strategy, the same exact market, and let's apply it to a different market condition. And now look at the signals that were generated, okay? So how could the strategy work one time fantastically and then another time terribly? Well, none of these signals generated positive results. They were all losses. It's because the environment changed. So what the average trade management technique does is knows when an environment is about to change, and it can give you an early alert warning system telling you to stay out of the market. That's the beauty of this technique. It's only applied with the college courses, and it's a great technique I've been using on a daily basis with all of my trading since I first learned about it some 40 years ago. Now, something else that I learned about 40 years ago was the PET-D. That stands for the Primo Early Trend Detector. Now, since I learned about it 40 years ago, it wasn't called the PET-D then. It was just simply known as the formula. It's a tool I picked up on the trading floor, and it was something we had to calculate by hand. But now we've turned it into a proprietary color bar algorithm. So all we have to do is simply apply the color bar algorithm to our charting software, and it automatically changes the colors. So if you see a series of green bars, what it does is it tells you the short-term trend is up. Now, if you see a series of red bars, great, the short-term trend is down, okay? It's that simple. There's nothing you have to figure out. There's nothing you have to do. It's a proprietary tool. All you have to do is know how to read the signals as they are in terms of the color of the bars. And this is what we do once again in the course. As you can see here, the beauty of the PET-D is that it tells you which direction you should be trading. See how all the bars here are all green. You would not in your life be caught dead selling anything because all of the bars are green. What is the market telling you? This is translating that the market wants to go higher. Now, once you know the trend, you can apply any strategy, any technique. It doesn't have to be one of mine. It can be one of yours. It can be from another educator. But you can apply to that direction, and it will increase your odds for consistency substantially. So this is the beauty of the PET-D. Just look for the colors. And remember, once again, it's a proprietary technique, and the beauty of this and the value in the PET-D is not in discovering what it's based off of because we're keeping it in-house. The value, the true value of the PET-D is in learning how to apply it properly to your trading, and that's the secret. Now, I can almost guarantee that most people don't know how to apply it correctly. Well, this is what I teach you in our courses, the proper way to use the PET-D. Now, one of the hidden secrets about the PET-D, I'll just share with you right now, is that you can also use it for longer term charts. So if you have a long-term portfolio, if you have an IRA account and you like to see how your investments are doing, we can also use it for that benefit. Now, here is a monthly chart of the S&P 500 going all the way back about 22 years, back to 1995, 1994. Okay, and you see all the peaks and valleys of the S&P on these monthly time frame. Each and every one of these bars is a month. Now, as we went up to the .com area here, the .com crash set in, and we went into a great free fall in the markets from 2000 down to 2002. All right, and then we firmed up and we matched the old .com highs, but then we fell in 2008 into the banking crisis, financial crisis. Then we started the Great Recession here and sell off into 2009, 2010. But since that, we've been going up ever since. Now, a lot of people are worried. A lot of people are wondering, well, are we reaching some type of a top? And again, we've been going up for quite a long time. We have a new administration, new politics. Are they going to affect the markets? How could we know whether we should be staying in for the long term or whether there's going to be another .com or a financial crisis happening soon? Well, with the PET-D, it's really simple. You apply the color bar tool, and the way we apply it is by just simply seeing whatever the majority of bars are, that's telling you the direction. We have a simple way to define it that we teach you in the course. Now we see where the majority of bars turned red, well then we got out of the market, or if you're more aggressive, you could have stayed short. And the majority of bars are green, well then we just simply change. So this is the beauty of the PET-D. Once again, another added bonus within the Emini College course. So let's go over the curriculum one more last time. Week 1, we cover the foundation and the building blocks and the basic philosophy behind our trading. Week 2, we cover our most popular and consistent pullback strategy, strategy number 1. Very basic strategy, only uses one indicator. Okay. Week 3, we go into our most popular strategy, strategy number 4. A pattern recognition strategy. It's based off of a specific pattern that I teach you exactly what to look for. All right. Apply to any market, any time frame, any direction. Week number 4, we go to the strategy that was just based off of trading the E-mini S&P. Once again, it can be applied to any other market, but I found that it works the best off trading daily bars in the E-mini Future S&P. All right, and we showed you that signal that was just generated a little while back. Week number 5, our most popular tool to date, that's the PET-D. I'll show you all the different ways to apply it, the ways you can use it for futures trading as well as stock and currency pair trading. And then lastly, we put it all together. We answer any questions you may have and spend a good portion talking about how to apply advanced trade management, a technique I learned some 40 years ago that really helps me to stay out of really choppy markets and back into the good markets, okay? Now, one of the added bonuses as well for educational purposes only is that we provide our members with signal alerts. Now remember, we're not about giving you signals so that you can just blindly take the trade. Remember, we said we don't believe in that. That's a recipe for a disaster because you're taking yourself out of the game. But in the beginning, while you're learning what to look for, while you want to identify what certain stops look for, we provide you with these signal alerts so that you'll know if you're in line with a proper setup. For example, on the 24th, you would have been emailed this, that a strategy number 1 had generated a short signal. So if we look here, here is the signal on the 24th of October this past year, strategy number 1. Okay, so as we can see here, well, okay, it looks like we're actually going up. How could this be a sell signal? But once we apply the rules, we see that the E-mini fell out of bed there. Okay, so that was strategy number 1. Now, later on, going further into the next month, on the 8th of November, guess what? We generated a sell signal. Now, this was a strategy number 7 sell signal to go short the E-mini S&P. Now, here was the signal that was generated. I'm not going to show you the chart because some of that would divulge the rules in which how we executed this trade. But just let me tell you that on this particular setup, you would have had the opportunity to generate a profit of nearly 90 points. Even though the market closed up here the next day, you had 90 points in your favor to work with. We go over that in the course as well. That would have been $4,500 per contract if you had taken advantage of that. And then lastly, here was one that was just generated a couple of weeks ago. Strategy number 7 generated a buy signal in the E-mini Futures, okay? So as we can see, this was on the last day of the year. The market had been going lower and lower. Someone could be saying, well, boy, Steve, it looks like the market's really going to fall out of bed the first of the year because we've been heading lower and lower. Well, Strategy 7 generated a buy signal on the 30th, and looking into the first week, in 3 days, we generated a profit of roughly 40 points in the E-mini S&P. That's $2,000 per contract, okay? So we show you different ways where you could have exited. We're not saying each and every person would have taken exactly that amount out of the markets. Perhaps you only wanted to take 10 points, maybe 5 points, maybe 20. Remember, we want to let you make the decision. We're not making decisions for you, because then we turn you into a robot again, and we're basically saying, you don't know how to do this, we do, so just take yourself out of the game. Once again, a recipe for disaster. You must make your own decisions. This is our philosophy, and this is what we teach you in the course. Now, we have tons of testimonials from past colleges, from other courses we have, and so you're invited to go to either my site or to ProTrader Strategies, where they have more updated testimonials of people who have taken our courses, who have, for the first time in years, begun to be consistent in their trading. We have people who just started trading who are consistent. We also have people who have been trading for dozens of years who were never able to make money, who are finally able to turn their trading around, okay? So let's recap before we go into any questions that you may have. Remember, it's 6 full weeks of trading tools and techniques, 3 proprietary E-mini strategies. We teach you exact stop placements, exit, and profit targets. We provide you with an educational signal service. We have conservative as well as aggressive versions so that you can take your pick of how you want to trade it. As a special bonus, we're throwing in 2 of our best techniques, the ATM and the PET-D tools. And you're also getting 40 years of trading experience. We're not just giving you this on a CD or giving you the link to this online course and saying, well, good luck. If you have any questions, email us. We'll try to get back to you. You have someone who's been actually trading these techniques for 40 years who's going to be your personal mentor. We're going to have live classes that are going to be starting very soon, and you'll be able to converse with me and ask me any question you'd like in a live setting, okay? So this is a great, great opportunity to get back on track. Remember, just as my mentors taught me, successful trading should be non-subjective, should be consistent, should be as simple as possible, and most importantly, should make you a part of the process. This is the foundation of the E-mini College, all of these 4 pillars here, making sure that you can follow each and every one of these so that you can be in charge of your own trading. Trading for the first time with a purpose. As your educator, I'll be with you every step of the way. Remember, we don't want to trade for you. We want to teach you how to trade. So you're getting tons and tons of information. Here's what's offered in our Elite Trading College, Elite Emini Trading College. Once again, 6 weeks of detailed instruction, 3 proprietary strategies, all the exits, entries, and stop placements you can handle. We give you each and every one of those to choose from. Signal alerts, weekly webinars, advanced trade management, okay? We throw in the PET-D, Primo Early Trend Detector. Now, you also get instant access to all this, okay? And if we threw all this in but sold it separately, you would actually be getting over $12,000 worth of courses. That's how much information and trading expertise is jam-packed in the E-mini College. On top of that, you're also getting live mentoring included with this. But for all the people in attendance today for our special 2017 discount, we're dropping the price dramatically. So $12,000 worth of information is being drastically reduced down to $49.95. But guess what? We're not stopping there. We're going to reduce that by 10% more. We're actually, for the next few days, we're dropping that price down to $44.95. And we're offering payment plans. So for the small sum of $44.95, you can be up and running in the live classes, 6 weeks of live training, and you can have me as your personal mentor for life, actually, because once you take my courses, it just doesn't end after 6 weeks. You can always converse with me. You can always contact me through email. So this is all included, and remember, payment plans are available. So for a small deposit, you can be up and running and begin the college in the next few weeks. All right, so here's how to take advantage of this. ProTrader Strategies, they're my sister site. They handle all of my marketing of my courses and of my colleges. You can email them at trading@protraderstrategies.com. Probably, I would say the best thing to do is to call them directly at area code 310-598-6677. And as you see there, that link they have on the very bottom of this screen is the link you would go to, but it's not live. So if you wanted to have a live link and just click on the link and get more information and go to the sign up page, they have provided it for you in the chat box. So to learn more, as you can see there, and reserve your spot for the Emini College, use the link in the chat box. Once again, the best thing is probably to call ProTrader Strategies, because they can have you up and running and put together a really nice payment plan for you, so you can just come up with a small deposit and still be in my class very soon. Okay, I'm going to leave all this information up here so you can copy down the number and the as well as the email address, and I'll answer any questions you may have. Let's see. First question from Ted. Oh, hi, Ted. He says, since there is a different buy and a sell at different time levels, which one do you use? Okay, well, see, Ted, I think this is something that is one of the misconceptions, once again, that most traders fall into. This is a technique that states that you have to have two different time frames in sync. All right, so meaning that if you are getting a signal, let's say on a 5-minute chart, well then the hourly or even the daily should be in sync. In other words, you should either get a signal or you should be in the same sync of the trend with that other time frame. Now, I often state I have been trading for 40 years, and in my 40 years of trading, I personally have found no consistency when using this technique. I know a lot of people swear by it, a lot of educators teach this, but all it served for me is to keep me out of good trades. While I'm waiting for those two time frames to line up, I miss a trade. So what we teach is only look at the chart you're trading. There's no in our courses, there is absolutely no requirement to look at what a hourly or what a daily chart is doing if the signal is on a 5-minute time frame. It's actually no, if that's the question you're asking, you would only look at the rules that pertain to the 5-minute time frame. Okay, that's the way I've traded. That's what sustained me. Now, having said that, once again, we are not in any position to tell you how to trade. If you swear by that, if you feel that, no, Steve, it works for me, I have to use that technique, I've been taught that since day one, well, that's fine. Remember, it's not our philosophy to tell you how to trade. I'm just telling you that that technique or concept is in no way required or used at the college. All we do is say, if you get a signal on a daily chart, that's the only chart you're looking at. Who cares what the weekly or what the yearly is doing? It makes no difference. If you get a signal on a 1-minute chart, that's the only chart you're looking at. We have no interest in what the 5-minute, the hourly, the daily is doing. Okay? Take each chart for what it is, and you'll get on that road to consistency. Okay? So I hope that answers your question, Ted, if I answered it correctly. Another question, will I receive a recording? Yes, you will receive a link to this recording, but one thing I want to state, a lot of people have done in the past with other colleges, they've taken their time and they said, well, you know what, I'm going to watch this recording again, I'll wait, and then they, forget about it, and then they watch it a week later, and then they say, well, it sounds really good, I'll give it another couple of days to think about it, and then I'll jump in. Well, I can almost, guarantee that if you wait that long, you'll miss this great discount. Sure, you'll still be able to get into the college, but maybe you'll miss a live class by taking the time. Also, you'll miss a great discount that we're providing as well. ProTrader Strategies, once again, is my marketing division, and they handle all the discounts and the payments. And so they may only be running this promotion with the payment plans for this particular presentation. If you wait too long, you may not be able to take advantage of a payment plan. So as I stated earlier, I think the best thing to do would be to give them a call. There's no obligation. Ask them questions. Ask them how long they can hold off with this deal. Ask them how long this discount is going to be. And then you'll be able to attend the first class, get a great discount, as well as come in with a small deposit, and you'll be up and running. Remember, this is $12,000 worth of courses that we're offering for about 60% off. So it really is a fantastic deal discount. And it's not something where you have no interaction like so many other courses do, where they just send you a blind disc. You're going to be in the college with me, okay? Let's see, another question. I understand that the training is live. Please explain if the training is designed at a particular time of the day and then the videos are available for review. Great question. Yes, the way we've structured these colleges in the past is, first of all, after we finally see that we are closing the college, that we either have too many people or we want to keep it to a certain amount, what we decide is, we take a poll, we ask the people what the best time frame for them would be. Sometimes I have given these classes on the weekends in the early morning. I'm on the West Coast, so it's been no difference for me to give a class at 6 a.m. my time on a Saturday, because I know that maybe in the afternoon for some of our people in different parts of the world. Or we can do it during the trading day. We can do it in the morning, the afternoon. A lot of times we'll do it on Fridays after the market closes on Fridays. But we want to do it is accommodate everyone. So we basically wait for everyone until we close the college, and then we pretty much take a vote to see what the best time frame for everyone would be. Then each time we have a class, we record it. So let's say you attend the first 3 live classes, but you're not able to make the remaining classes. Don't worry, everything is recorded, and you can watch the recording at your own leisure. Now, you also will have full access to all the recordings. So even a year later, if you want to refresh your course, you can still look at the recordings anytime you like. Let's say you really started trading strategy number 1 and you gave all your attention and focus only to trading strategy number 1. Well, that's great. Let's say a year or 2 later you think, well, you know what, I'm going to start trading another one. I want to trade strategy number 4. I'm doing well. I'd like to expand, and maybe I'm going to start trading 2 strategies. Well, you can view those videos anytime you like to get the full refresher course on strategy number 4. And you can email me anyway. A year or 2 later, I'll still be here. I've been trading for 40 years. I don't have any plans on stopping now. And I'll still be here to answer any questions you have. So that's part of the beauty of this college. We're there with you step by step, every step of the way. And it's someone who has been using these techniques for 40 years, okay? You have access to all the information, recordings, live classes, and it's just a really great college. Once again, I invite you to go to ProTrader Strategies website and look at some of their testimonials from past colleges and courses. We've really changed a lot of people's lives around simply by getting them consistent for the very first time, okay? Any more questions while you have us here? Remember, the college will most likely start, I believe, in the next couple of weeks. So take advantage of these discounts as you can, because we're going to be closing it up pretty soon. If we took everything separately, if we took all the information we're giving you, all the different courses, all the concepts, philosophies, all of the different techniques, all of the different bonuses, PET D, ATM, if we took them separately, this would roughly cost you about $12,000. That's how valuable this is. But we slashed it down tremendously. So take advantage of that with a payment plan, and I'll be seeing you in class within the next couple of weeks, and you can really start 2017 in the right direction, okay? You won't be worrying about, well, boy, this is going to be another terrible year for me. You can finally get on board with some sound fundamental tools that have stood the test of time. Okay, so as we conclude, here's all the information you need. Remember, contact ProTrader Strategies as soon as you can. There's no obligation. I would suggest calling them at the number there provided in front of you. There's no obligation. They can answer any question you may have about payment plans, about discounts, and about when classes start, and about times, and we'll be up and running really shortly. I want to thank you all for attending today. I hope you got something out of it. Even if you just use those 2 rules I sent you, you can see the validity in them and the power behind those 2 simple rules. But you must act quickly if you want to take advantage of these discounts, okay? Thank you so much for attending today. I really look forward to all of you becoming members of the Emini College, and most especially students of mine. Thank you so much. I'll see you next time. Bye-bye.